let me start with the reaction of prices. Prices plummeted by 60 to 70% between June and early December 2008. This was for several reasons. First of all, the prices were driven up too sharply in January-June 2008. There was no fundamental justification for the rally in prices. This was partly boosted by fund buying. Now we got this overdue reaction in prices, but the 60 to 70% price decline was very substantial and was stronger. Went down sharper than expected and than necessary. So you can make a point arguing that at the end of November, early December, commodity prices, or agricultural commodity prices, this is what we are talking about, agricultural commodity prices went down too sharply. Well, what is the measurement for this? One of the measurements is production costs. If even a palm oil producer cannot make a profit with prices offered by the marketplace in November, then you get a very strong indication that prices can hardly move down further, because palm oil is one of the most productive, if not the most productive vegetable oil. So the smallholders and the less productive producers in Malaysia were no longer able to cover their production costs back in early November. Also, several other oilseed producers like soybeans, sunflower, rapeseed faced a situation where they say, oh, with these fertilizer costs and other costs, I'm below break even. So you already saw in September, October, a response by producers all over the world to reduce fertilizer application, which is wrong. I mean, if you, as a producer, reduce fertilizer application or reduce pesticides to save costs, you would lose more in form of lower yields. But still, some producers in a difficult cash situation, they reduced their inputs and they reduced their plantings, like for example in South America. We now have a problem in South American soybean production, partly because of lower than potential plantings of grains and oilseeds between October and December 2008, partly because of less fertilizer, partly because of less other inputs. So the question was, is the price outlook positive? From the producer's point of view, reactions have been made to these unattractive prices, and this will have a dampening effect on production, which will support prices. On the demand side, we still have problems in several countries. The economic crisis is ongoing. It's probably worsening in North America, in Europe, not everywhere, but in major European countries, Germany, UK, France, and some others, in some Asian countries. So we have problems on the demand side for meat products, value-added products in general, also for edible oils, also for biofuels. The biofuel demand has suffered in certain countries as a result of the mineral oil price decline. Mineral oil prices going down to $38, $36 a barrel, which is down some 70% or 73% over the peak of $147 a barrel at the beginning of this year. Of course, this decline in mineral oil prices also reduced the attractiveness of biofuel or biodiesel production. Ethanol producers in the US are in trouble. We still have mandates. These mandates are keeping ethanol production and biodiesel production at the minimum level, and the mandates are being increased, which is positive. There are several countries who are raising their mandated usage for biofuels now, which is positive for prices, but on the other hand, the low crude oil prices, are still a factor which are dampening overall offtake of vegetable oils. So this goes against the argument of rising prices. The increase in price, which we have seen since early December, was necessary. Prices went too low, but additional upward potential may be limited as long as we have these demand problems. Two other factors I would like to mention. Weather in South America is going to be one of the most important price determining factors in the next 4 to 8 weeks. If we don't get the required rainfall in the dry areas, and more than 50% in Argentina is in trouble, then there is a good reason to see prices rallying, including canola, soybeans, vegetable oils and oil meats. If it continues dry, which we don't know. So we just have to look at the market, look at the weather developments. The situation is critical. If we get very good rainfall soon, then it could be some kind of last-minute rainfall saving the crops, but if not, we could be in trouble. To the benefit of Canadian farmers, those who have still not yet sowed. Another and the final factor I would like to mention, palm oil. Palm oil production is going to decline seasonally in January, April, and the growth in world production of palm oil will be considerably smaller than over the past 12 months. So in a way, palm oil, the development in palm oil, because of biological yield cycles and so on, the development in palm oil will be supportive for canola prices and for canola oil prices. This is also a fundamental factor which would tend to lead to higher prices in the coming months. Okay.